data points that Chase Bank doesn't want you to know. So the total credit limit exposure for Chase business credit cards is 150,000. As I talked about it earlier on the call, you can get up to 150,000 for a business credit card on one card, or you can have two $75,000 credit cards. So the total credit limit exposure for Chase is 150,000. All right, and then the business line of credit, you can get up to 250,000. It used to be you can actually get up to 100K with no financials. But that's obviously changed with the climate. They're very likely going to ask for documentation. In order for you to get a BLOC, you have to have like 6 months a business bank account with Chase to qualify for a business line of credit. And it's very likely they're going to ask for documentation. Again, it used to be where you can get up to 100K with no documentation. All right. So the problem with the Chase BLOC that a lot of people don't know, and I just personally found this out last year, early part of last year, is that Chase has a BLOC for any amount. All right. So UCC filing is basically a lien against your business. And I'm going to break down a more definition. So it stands for Uniform Commercial Code Filing. It's a lien against your business. It allows creditors to notify other creditors about a debt, assets used as collateral for secured transactions. They file that with the Secretary of State, and they do report that to business credit as well. All right. So there's two types of UCC filings. Blanket UCC. This type of lien is used to collateralize all assets in the business, typically when the business gets large lines of credit, like a BLOC or a small business loan, SBA. And then there's specific UCC. This is mainly used for specific types of collateral like equipment, financing for vehicles. Only the lenders has the right to possess if the default on the loan. UCC filings report to business credit for 5 years. Now, what you want to do if you're looking to get some BLOCs, what you want to do is banks usually have like a threshold, an amount they can lend before they place a UCC filing. So you always want to ask the banks what their threshold is before placing a UCC filing on that BLOC to stay under that threshold. So you can keep getting BLOCs as long as you stay under the threshold and they're not reporting or they're not putting a UCC filing for that BLOC. All right, UCC filings can have a positive or negative effect on your business, right? If you have a positive payment history, it's going to look good on your business credit report. And again, they report to business credit for 5 years.
Let me add something to that real quick, guys. I just went for a round of funding, and UCC filings, you have to be aware of them because they can limit your ability to get more funding, but they also help you get more funding when you go for your next round of funding. Right? So you want to, because what it does is it's comparable credit for other business lines, right? So if your business has gotten a $100,000 loan, or if it's got a $100,000 business line of credit, that is good for the next time that you go for funding. Here's the problem though. If you don't know how to manage that thing, it can destroy you. But if you have an exit plan, which I tell people have an exit plan when it comes to funding, then it can be a huge benefit to actually double or triple up your next round. Here's a case in point. There was one lender, which I'll talk about maybe this month, that I went and I got, I think, $120,000 loan from them. And then I also stacked it with some other ones that had UCC filings as well. But what I did is I was strategic in when I got those, because I got them all at one time. I had the DocuSign sent to me, and then I pushed the button on all of them at the same time. So when I got the offer given, sure, I'll have a bunch of UC filings all over my account, but I didn't actually pull the trigger on one until I had all the DocuSign sent to me, and then I pushed accept. So that way, none of the lenders saw that I had UCC filings until it was too late, kind of like when they've already moved forward with me. It's the same thing. Like, we're going to talk about that with credit card stacking tomorrow. It's a little bit of a gem. You guys are going to want to tune in because it's going to be fireworks tomorrow. But when it comes to UCC filings, you have to know the data points. Like, you have to know that Chase is going to put a UCC filing of any amount, because if you have that on there, PNC may be iffy to give you a max amount or amount that you could get, or another lender. That's part of the reason why Anthony was talking so much about non-UCC funding, because what happens is if you can strategically build out your business credit reports, like Wells Fargo goes up to $100,000 with no UCC filing, bam, there's one. There's other banks out there that do no UCC filings as well. Now you're able to get a lot more funding because there's no lien on your business. And so then at the end, you get the business lines and the business loans with the UCC filings with an exit strategy for the next round of funding, pay them off, run it back again. And so what I did is I did an extension on my taxes, and I have all of the plan to go for my second round of funding at the end of the year. Once I do my taxes, then I'm going to have, a multi-million-dollar tax return that's going to show me paying how much taxes that I paid, right? I take that tax return of this year and the previous year. That's the power of paperwork. I hope somebody heard me. Power of paperwork is very, very important. The no doc stuff is still out there, but it's the ones that you're hearing about are pretty much non-existent. So when you see things like streamlined, easy, and there's ones that are out there, there is, but the moment that YouTubers like myself, Credit Plug, Toby, expose them, they go away very quickly, right? And so you need to know how to get the non-UCC filing lines. You need to know how to build up your comparable credit with business credit. You need to know how to diversify that credit, because they can pull your business credit anytime without your approval. This is not the personal side anymore. Any lender can pull your business credit at any time that they want to, right? And so it's really, really important that you know the power of this UCC filing removal hack that Toby's going to talk about here and that Irv's talked about before, because you want to not have UCC filings when you're going for more funding, but you want them on, you want that on your report when you go for more, if that makes sense. You want to show that you've had these established lines all over your business credit, but you also don't want them active though when you're going for more funding. I hope that landed with somebody. I hope that made sense with somebody. It's what you don't know that you don't know. And that's why we're going to give you all the game on Chase, relationship bankers, UCC filings. And then tomorrow we're going to talk about different avatars and different personalities. Like, hey, I'm somebody with a perfect credit score, but I don't have a credit profile built out. That's going to be one bucket of funding. Then there's going to be somebody with horrible credit that has a lot of financials and that has this and that, and that's going to be another bucket of funding. So tomorrow is going to be a plethora of examples and case studies, and we're going to have conversations around Avatar A, Avatar B, Avatar C, Avatar D, and we're going to talk about that. Toby's going to talk about some of his mistakes that he's made in stacking, some of the wins that he's gotten stacking. I'll talk about some of mine as well. So we're going to come together tomorrow and talk real credit stacking and how to run your sequences and what you need to know, because if you make mistakes in one element of it, the whole thing is fucked. Okay. And that's what you have to know. And that's why people sometimes like to work with funding companies, because they have that insider information, but we want to give you that information so you can do this on your own and save thousands of dollars. Hope that makes sense.
Yep. And just to add on to that, some of the banks will ask you to pay off that lien or that BLOC before you go to their, they basically want you to pay it off, or they won't give you that BLOC unless you have that BLOC paid off from another bank. Yep. So how to remove a UCC filing. Most of the time, once you pay it off, it gets removed, but you can verify that to the business credit report, or you can just call the lender to remove the UCC filing once it's paid. If that doesn't work, you can you can mail a formal request to remove that UCC filing. And then the last step would be just to file a UCC 3 form, which will get it removed. I think they have to remove it within like 20 days or so. So it's pretty simple. I mean, once you pay it off, it does get removed, or you can just call the lender to remove it once it's paid off. All right. So this is these next slides, insider secrets with these business relationship managers. All right. So first, Chase, a Chase business relationship manager is the difference between a 25K approval and a 75K approval, right?
Yep.
It's a big difference, right? Now, Chase business relationship managers, they're really for private clients with Chase, but because of all these funding companies and they penetrated and they went straight to them. Now they're pretty accessible to anybody who has a business checking account. But before, it used to be strictly for private clients. So what does a Chase business relationship manager do? Right. So they submit the applications directly to the underwriters. Normally, well, not normally. Yeah, this is how it is. When you submit an application to a business relationship manager, everything is done through DocuSign. So it'll be done through the email, unless you do it in the branch, of course. They are incentivized to get you the highest approvals. I'm not sure if they get like a commissioner or anything. I haven't asked that question, but they are incentivized to get you a high approval. They basically work on your behalf to reconsider applications if they're denied. And here's the crazy part. This is crazy. Some business relationship managers fill out the application for you.
Mhm.
They literally fill out the application for you. All you got to do is when they send you the DocuSign, you make sure everything's good, and then you sign it off. They fill out the application for you. They put the business revenue, they put the personal income, they put the business type, and that's because they want you to get the highest if it's a good one, right? If they know the game, right? They know how this funding stuff works. They actually fill out the application for you. So you just have to sign, and then that's it. And then you
Yep.
can get that 75, 70K approval. And sometimes they'll even tell you what as far as revenue, they'll say you should put X amount, right? I recommend you put this. They're not some of them, they don't want to tell you, but they tell you, right? They'll say, I think you could put that a little bit higher. That personal income, you can put a little bit higher. That business income, you can put a little bit higher. This industry is a green industry. These are the industries we like to provide good approvals for. These are the industries, X amount, whatever those industries are. So that's the difference between a good business relationship manager and someone who's just submitting applications,
You know what's
right?
crazy too? Go back for a second. When
Yeah,
I was working with your relationship manager that you put me in touch with, right? She and I had a lot of email exchanges because I had some questions for her, right? I
mhm,
wanted to vet this thing out a little bit. And she actually let me provide my NAICS code, right? Which was pretty dope. That was number one.
right,
And then number two, I was looking to go for the BLOC, but I didn't want to, and she said I would be approved for it, but I didn't want to go that route just yet because I had, plans for building up the lines of credit with the no UCCs before I actually went forward and did that. But she actually said, hey, heads up, this is going to be a UCC filing on the BLOC if you want to go with that, which I thought was super dope because she didn't have
right,
to tell me that. And I could have got involved in that. And then number two, she let me provide my own business code, which was super powerful because now I control the narrative going forward with my relationship with Chase. So I wanted to add those two nuggets in there because, that relationship that you plugged me with was the very reason why I got approved. Obviously, I had the right profile too, and I'm the
right,
right
right.
business. But
Yeah,
those things matter because most business bankers will actually put whatever code they think that you qualify for when it comes to what type of business you are, which we all know that at-risk businesses don't get maximum amount of funding. So when you're at your teller at Chase, that's not a relationship banker, right?
right.
And so most people think it is because they're sitting down with a banker in branch. Oh, they must be a relationship banker. No, honey, they're not, right? You
Mhm.
have to be put in touch with one or you have to be connected to one. And so that's kind of like what we want to give you on that. We're going to talk about how to get to them. You can plug in with Toby. He can talk to you about it more. But the bottom line is, guys, is very, very powerful because when you control the narrative and when you get to give the data of your business to the bank and the bank takes your data instead of whatever's at somebody's fingertips, super powerful because it's so hard to clean up metadata. It's so hard to clean up all these corporate systems. You try calling Chase, you may have to go around a couple times because these major companies, it's hard to get in touch with the right people, right? So these little things will save you hours and years of time.
Yep. And then, like I said before, having the right BRM can be the difference between 25 and 75. I mean, that's a big difference. That's 50K right there, as far as the big difference. These are just some examples, some approvals. This particular guy right here, I kind of cross out his name. He DM'd me, and he said, by the way, I took your advice, went to Chase, opened a business checking account with them, got approved for 100K, 0% with a business relationship manager. This is 80K right here. This is 75K. Um, I'm sure if this is Dan or somebody else's that I approve. But here's another secret that a lot of people don't know. Because the funding companies really penetrated Chase and got into them and sweet talk to them, the business relationship, I know this for a fact. Business relationship managers now this is how coveted Chase BRMs are, because you got to think about it like this. If you're looking for 150,000 in funding and you can get 75K with one card, you're halfway there, right?
Mhm.
You're halfway there. Or if you're looking just to get 100, you're 75% of the way there. So some business relationship managers themselves charge 4 to 10% success fee for those high approvals. That's pretty insane to me. I couldn't believe it, but this is 100. I know this to be 100% fact that certain business relationship managers, themselves, they'll say, okay, I can get you 75,000, but it's 10%,
Yep.
which is wild. That's pretty wild to me. I just couldn't believe that they do this themselves. So how do you get your own business relationship manager? Well, obviously, the first thing is you would open a business checking account with Chase. You sit down and request to speak with a business relationship manager and try to build that relationship that way. Get a direct contact. Make sure you explain your business and that you want to build that relationship and you're looking to get business